Welcome to TheoTrade. This is Don Kaufman. It's May 1st, 2019, and you are watching the TheoTrade video. There's 5 minutes left in the trading session. S&Ps right now are, well, there's some sell-side activity, people. We're down about 23 handles on the S&Ps and continuing to drop here coming into this cash close. Why? Well, the Fed flipped. Again, what effectively does that mean? Well, there was a statement today in the FOMC announcement that effectively said, let's break this down for a second. Inflationary pressures may only be transitory. All right, let's actually translate that because that makes absolutely no sense whatsoever. What transitory effectively means is those inflationary pressures that are not there right now, they may actually pop up a little bit later. Effectively, what they are really breaking it down to say is that don't you count on a rate cut because we're not going to give you one. So now the marketplace, which was in what we term kind of a Goldilocks scenario, right? Interest rates are never going to go up. They're going to hold rates low forever. All of a sudden, the Fed comes out today and says, don't you count on a rate cut. If you looked at the Fed fund futures, oh boy, are they shifting a lot. We'll look at that, of course, tomorrow live on TheoTrade in the morning. But let me actually get a bit more to the market. So as I said, the S&Ps are down just over 20 right now. A few factors that I want to show you that are in play. First of all, the volume out there. You might look at the volume of about 1.3 million contracts, and I just froze the screen right here with just moments to go. 1.3 million contracts, it seems kind of light, but there's one thing that you really have to take into account, and that is today is it's May Day. What is May Day? European markets, Asian markets are closed. So to see 1.3 million contracts trade when the rest of the world is kind of off, that's actually some fairly heavy contract size. So that's an argument that you have to understand. Again, it's heavy contract size given the fact that the rest of the world is not really in play today. Again, if you take a look towards the bottom of my screen over here, you'll see German markets effectively closed, Japanese markets closed, Hong Kong, China closed. All right, so you're seeing some heavy contract size given the fact that the rest of the marketplaces are just, in effect, not there today. All right, so the S&Ps are down 20. Now, the volatility futures, did they pick up a little bit today? Yeah, but this is nothing to get exciting about, right? You have a tough time getting excited when we haven't seen any volatility whatsoever as of late. And one of the first things, when there's that, if you will, first strike of volatility, just kind of what we're seeing with the S&Ps down 20. It's been a long time since you've seen any movement in this marketplace, right? It's been a one-sided market. One of the first things that I will look at on a trading session like this, I'll look, at the front contract or the active contract versus the back contract. And there's still, really a gaping differential between them. It's over a point. So when you've actually got, again, what people term like contango and backwardation, in this case, we're nowhere near an inversion, of the volatility futures. That is the short-term volatility futures coming over the long-term volatility futures. That would be an indication, if you will, that risk is here and risk is, here to stay. All right, we're not there. We're not even close to there yet. Nevertheless, any time that you get that, if you will, first strike of volatility, I start to look at all the volatility contracts. So the VIX played into it a little bit, but what's really actually on my mind is the VVIX, the volatility of the volatility index. It's taking off to the upside a little bit. Nothing too crazy. If the VVIX tomorrow, for instance, were to get to 100, then we've got something to talk about. Now, I do kind of throw a little word of caution over here that some of the Fed commentary today, may play out differently as markets around the world open up tomorrow. Why? All right, so when some of the European markets do finally, turn those machines back on, there may be some sell-side activity over in Europe, which can, again, spark some more sell-side activity in our S&P futures. We're going to keep an eye on the VVIX in the next 48 hours of trade. Now, there's a couple of curious things. So the Fed turns around, and again, they flipped again. So they did a 180 back in January, and they said that, well, we're not going to raise rates. In fact, we're going to hold steady. In fact, the Fed actually said this, we're going to hold steady for the course of 2019. Somehow, everybody translate that into the Fed is going to cut. Well, today, this Fed said, we ain't going to cut. Interest rates today, interestingly enough, this is the 30-year, the bonds are up. That takes interest rates down a little bit on the 30-year. But the 10-year is off by about 3 ticks right now. And again, Volume, well, rather heavy in here as well, given the fact that the markets around the world are closed. When I say heavy, look at this. I mean, you're trading just shy of about 2 million ZN contracts, and everybody's looking at the S&Ps. People, it's bonds, okay? It's notes. That is where it's at right now. With that, again, interest rates, it's a very confused kind of stance. So the yield curve is in flux right now. And what's surprising to me, and I warned you guys on Monday, if there's a place to look, if there's a place that's going to drive order flow, there's the closing bell. Ooh, and they closed them on the lows. If there's a place that's going to drive order flow this week, what did I tell you? I told you it's going to be out of the financials. And that's exactly what we're effectively seeing today. Out of the financials, take a look at their volatility. It's now up just shy of 22%, which earlier this week on Monday, we were talking about 18, 19% with just over a 40-cent move. There's still a 40, almost 2-cent move expected, except this isn't Monday. This isn't even Wednesday now. Wednesday is over. That was the closing bell seconds ago. For Thursday and Friday, we still have 40 cents of movement priced in, okay, to the XLF. Effectively what it says in the financials, get ready to rumble. Now, with that, let's take a quick glance over at volatility inside of the SPX, because in the SPX, we also have quite a bit to deal with, again, for the remainder of this week. You can't forget the jobs number. The jobs number is coming out this Friday. Well, what's the jobs number going to hold? Doesn't necessarily matter right now, because all of a sudden, the market is flipped again, and everybody thinks Goldilocks is dead, and the marketplace and the Fed does not have my back. All right, so we're going to be sitting on pins and needles coming into the jobs number, because if the jobs number comes out weak, people are going to be like, duck and cover, get under your desk. All right, and by the way, there's an interesting scenario for this jobs number. If the jobs number comes out weak, economy is weak, this is not good, the Fed's not going to help us. But if the jobs number comes out extraordinarily strong, that's actually a sign, if you will, especially the wage. That could actually be a sign of inflation, in which case the Fed could actually flip over again and say, we may have to actually increase rates sooner or later. Nevertheless, the SPX on the week, obviously today is a fairly substantial move, but we're nowhere near the edge of the expected move. The edge of the expected move is all the way down here, very close to 2,900. Now, cruise over to the trade tab with me for a second here on thinkorswim. Open up the May 3rd options. This is what's interesting. The volatility has absolutely exploded, okay, for the remainder of the week. That volatility was fairly docile early in the week, and we were sitting on a $37 expected move. 3 days have now passed. 3 trading days have now passed. We had a $37 expected move to begin the week with. Now we have almost a $30 move. So what gives? Well, I'll tell you what gives. The volatility has really, again, picked up in a big way over there. So even though that the volatility futures aren't exactly rocking, right? We were talking about the vol futures a second ago. By the way, as we were speaking, they kind of tightened up that gap. That was $1.05. Now the gap is about just under $1 in those volatility futures. The volatility futures weren't necessarily rocking. We mentioned the VVIX took off to the upside. The VVIX gets over 100 the next day. Things are going to get serious. But I am going to tell you what is serious right now, and that happens to be the SPX volatility, because that is, that's there. I mean, that SPX volatility, a $30 move in 2 days, is starting to get to a more intense level. So I'm also going to remind everybody, if you take a look at the S&P futures, we're actually going to cruise over to a 1 day, 1 minute. Why? Zoom out for a second. There's a gravity point. The gravity point is 29.11. It would not surprise me to see some continuation of some sell side activity and to cruise down to 29.11. It could even happen in the after hours. That's tonight. I mean, there's some earnings coming out, right? You're going to get a little ebb and flow of the marketplace tonight. But again, I would not be surprised to see the marketplace come into this 29.11. Other news that we got to get to, obviously Apple. For those of you that were in it, we, again, on Monday, I mentioned Apple, and I was going to trade Apple around earnings. We did trade Apple around earnings. And I kind of teased on this video a little bit, but many of you actually caught the trade, okay, within the trading room. By the way, the trade in the trading room, we talked about it on Monday. We talked about it on Tuesday. There was ample time, okay, to get into that position. What was the trade? Well, if I go to my Analyze tab, I'll actually show you the opening and closing positions. The opening position, okay, just a butterfly. It was a butterfly actually centered around, okay, the 212.50 strike. That's because the expected move was right around, took us right to about 212.50. The opening position, we paid 72 cents for the butterfly. My final closing position, closed it for $2.31. Again, This is, butterfly. Could I have held it a little bit longer? Absolutely. Nevertheless, just given the fact that we were cruising right and around like that 212 half range, okay, I had my out. I took it. I didn't want to play around, especially given the fact that Qualcomm had earnings coming out. Qualcomm, there's no question, could impact Apple in terms of movement. Took the capital and took off. All right, last but definitely not least, listen, this down move is going to provide some spectacular rolling opportunities in some existing positions. So I'll say this again and again on Thursday and Friday of this week. I have, again, an extensive number of duration in the money puts. Okay. Yeah, I've got a couple of bullish positions on, but predominantly my position is net bearish. Even a small move down like this has helped substantially. What do you do in a time like this? You got to run through your positions. You got to run through your positions and roll them if you got them, right? And effectively what I'm saying is let's go take a look at a couple of the underlyings. Lows. If you actually still have the duration in the money put, this nice little down move in the last couple of days has helped substantially. Roll them if you got them. All right, what else do we have? Lululemon, okay? Really right off the all-time high pretty much, coming in a little bit. This is one you want to watch in the next couple of days for a rolling opportunity. I'll next come on to XLU. XLU, this is none other than the utility sector. I do have duration in the money put over here, just off again some of the recent highs, but again having a fairly substantial decline of about 1% today. I would see, again, consider some continuation, if you will, to the sell side inside of the XLU. Next one on the docket over here, emerging markets. In the EEM, there's going to be some sell side activity over here. This is one that, again, this one is ripe to be rolled. Now I'm all the way out to June, and again, this is a deep in the money. This is one that I'm going to be probably looking at and possibly rolling tomorrow morning. Again, a lot of rolling opportunities with some sell side activity. All it takes, people, is one decent down day. We've actually got a duration in the money put on Caterpillar. This is one I'm also going to be looking at for a roll opportunity. Why? Well, again, I've already pushed it out to June, but we feel that we're probably going to see some continuation, some sell side in here. Last but definitely not least, one of the newest positions we have on is none other than Citigroup. Now, Citigroup, when was it put on? Well, it was put on Monday. A little bit of sell side activity over here. We'll be mindful and keep eyes on the Citi position again in the days to come. Feel that there's going to be a substantial rolling opportunity for a number of these key duration positions in the days to come. So stay tuned on that. Again, the S&Ps as we come into the closing portion of our trading session, down just about 25 handles, just shy of 1%. Overall, the movement inside of the S&Ps, come on, this isn't even but a flesh wound. Nevertheless, we're going to be watching bonds, watching financials in the days to come, because this could get a lot more serious. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.